The goal of today's session is pretty simple. I want you to help you understand one simple strategy that you can use to generate either weekly or monthly income. That's an adjustment that you can potentially make, and we'll talk about the difference between weekly versus monthly income utilizing options. We'll break this down into two separate components. Number one is the rules around the specific strategy, how to identify stocks that you can sell options on with the clear rules as to when to enter the trade and specifically which options to sell to generate income using this particular strategy. Then we'll talk about passive management. How do you actually manage this specific position once you are in a cash secure put or a short put strategy? Those are the things that we're going to try to cover during today's session. So who is this webinar for? Now, a lot of options related in webinars and education is geared towards someone who's an options trader, someone who's utilizing options in their portfolio. But the strategy we're going to cover here today is actually less so for those of you that are options traders and more so for those of you that are investors. So equity investors, stock or ETF investors, how you can utilize options to augment your stock and ETF acquisitions. How do you get a discount on your stock purchase? How do you generate yield on the cash that you have to potentially buy stocks? And just how much yield that you can potentially generate from these types of strategies. So most investors, you keep the majority of your wealth in long-term equity investors. So we're actually not only talking to those of you that have equity investments or long-term holdings in your portfolio, but also this is for the majority portion of your portfolio that is allocated to equity investments. Most of you that, even those of you that are experienced options traders, you probably still hold a very significant percentage of your accounts in long equity positions. So today's webinar is actually going to be option strategies for those long equity investments and how to enhance them with income utilizing options. And the strategy we're going to talk about here today, short puts, is specifically a strategy that you can use to purchase securities for your portfolio. And it can generate upwards of greater than 5% yield in a single month, not 5% a year, 5% per month on these types of strategies. That's how much yield you can potentially generate from selling puts. And that 5% yield goes towards a discount on your stock purchase. We'll go through some examples during today's session to help you better understand that. Now, this requires a few rules in order to achieve this consistent income stream. And that's where we're going to spend the time here today, is embarking on those specific rules. So let's start off by just a quick review of what a short put for those of you that are not familiar with this specific strategy. A short put is when you sell a put option on a stock or ETF that you want to acquire. And the key word here is the stock that you want to acquire. Meaning you shouldn't be selling cash secured puts or short puts on stocks that you're not interested in owning or don't want to own, whether that's because you don't know anything about the stock or you don't believe that it's a good investment. You should only sell puts on stocks that you would own in your portfolio. That's the first requirement, okay? The second thing is once you sell that put on that stock that you want to own, you're going to receive the premium on that put option as yield for the cash that you're setting aside to potentially purchase the securities. So think about think about it as like an order that you're placing that obligates you to buy a specific stock at a specific price. And what you're going to do is you're going to get paid in order to place that order. You're going to have to set aside cash to place that order. But once you do, you're going to receive some income for placing that order. And like I said, that obligates you to buy the stock or ETF at a specific price on or before the expiration date.